Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting us today in the lab. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time. This stream's about integrating Bookmap order flow tools with auction market theory using the volume profile in the intraday developing time frame. It is based on structured trades that are available to everyone at no cost in the Bookmap Discord Trader Lab community. The Trader Lab is a group of like-minded traders that have come together to leverage their collective experience in order to learn the business of trading. What is the business of trading? Well, we seek to answer that for you here in the Trader Lab community and in this stream using structured trades that are available to everyone at no cost, including a library of webinars. Now, one other point I need to make. I am streaming from Costa Rica, and there is an unstable internet and infrastructure here. If I drop out, another link will pop up in YouTube. I can be down as long as 5 minutes, but hang out. I will return, as they say. And thanks again for visiting the Trader Lab. We have a lot to go into today. I'm going to talk a little bit about higher time frame and how pieces come together. The market operates in fractals, in my opinion. In other words, it trades on top of itself and rotates. We're going to talk about how this manifests itself. Let's get going. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. And please remember, this is not a trade calling room. This is for educational purposes only. If we get into real time, we'll talk. The purpose of this stream is to help you understand how the market works, how you can get in alignment with it at times, and how to build out the business of trading. If you're interested in the business of trading, not just a video game or a hobby, this is the place, in my opinion, that you need to visit. If you think you don't need that, of course, then the Trader Lab is not something you'd be interested in. But I think all traders can benefit by getting an understanding of what is this business, how does it work, and how might you get in alignment at times with it. Let's take a look. I don't want to waste time. I want to share what we have here. By the way, if you're interested in these structured trades, there's 60 PDFs of them. You have to vet them for yourselves. Some of this is just research. I'm not a vendor. There's no cost. These are actual trades I took and a lot more. This is order flow phenomena, and I shared these with other traders a number of years ago, probably 5 years ago, when I was getting a lot of questions on what are you doing? Well, here's what I'm doing, and here's what I'm doing now. Now, I want to show you some very important information. This is called a volume profile. I'm not going to go into the basics of this. All this is available in the Bookmap Discord Trader Lab community. It may look like it landed on Mars. I understand. But there is method, as they say, to the madness. This, we had our sharp sell-off last Thursday. This was the target below. Now, again, I'm not going to explain why or how. But if you understood how the market works, you would understand why we would be looking at levels. These levels are based on volume. The truth of the market, in my opinion, is not an indicator. It is participant behavior. And that's a big gap between what most retail traders think this is, which is a business of indicators and time frames. And somehow, if you get the right mix with the right tweaking, the right time frame, the right everything, that somehow you'll have an ATM in the basement. I'm going to suggest that's what most retail traders do, and statistically we know the outcome for most retail traders is not so good. Why would it be different for you if you're following a process that most retail traders follow? It's a question. I'm not going to postulate the answer. You can draw that answer for yourself. So let's take a look. If this is too low, and this is called a high volume node, a naked volume point of control, which means it's a retail price. Trading is shopping. It's not indicators. Now, might be, but it's not for me. Indicators have a place, But if you don't understand how the market works, why it does what it does, and the purpose of this stream is to help you understand market mechanics, how to get in alignment with it, and still we all take stops. That's not the point, right? Every business has overhead and costs of production. But if you understand market mechanics, might that do something for you? Last week, these last 2 days, Wednesday, Thursday, 80 was a reference for too high, and 35 and this down here was a reference for too low. Don't know. So what do we know? 35, 60, and 80. Let's take a look at what happens here. So we come down, we close back inside this composite. A composite's like a huge consolidation. When you take everybody out, and this is the low of this consolidation, then you have breakout traders get short, and you have the longs get thrown under the proverbial bus. But this is too low. And then we closed inside. And then in this day, this was the highest volume. Think of it like a retail price. You go to the store, high volume buyers and sellers agree. But what happens then if the previous retail price was at 35 and we gap higher and we come down and check 35? Too low. What about this? Maybe too low. What about this? Maybe too low. Now we have 60 and 80. Remember these numbers, very important. And what do we have above here and here? Stops. What did we have under there? Stops. What does that tell us about here? If we test 35 and it's too low, then what? Buy stops. Buy stops. And what's our target above, you ask? 59.98. Why? It's already on the chart. And I can't answer all the whys, but I can say you can learn the why in the Trader Lab. Now let's remember 59.80 and let's come to today. Try to do this without making big trouble. And believe me, big trouble is my middle name. By the way, there's a little more. What's up here? Gap low. What's up here? Gap high. What are we doing? Squeezing. If we come above 80, then we have 18, then we have 30-ish. We get into the gap, squeeze. To where? 80, 60, 80, 60, 98. And who knows? Not a recommendation. Let's watch. There's more. So now, let's get into these levels a little further. Now, remember, 59.80. What did I say? 60.80? Losing it here. 59.80. 80. Watch. What's the ETH low? 80. 80. What is Friday's high volume price? It's called the naked volume point of control. Retail. Retail. We check it in the ETH. Too low. Then what? What was the level? 60.18. 60.18. 60.18. 60.18. Watch. This is auction market theory. I know. Where's Igor? This is a structured trade. We discussed this in Trader Lab this morning in the ETH. Long to there to the ETH high. Scale. I'm just showing you this because it's posted in Trader Lab this morning. And I don't call trades to there. Trade's over. Are you okay with this? This is called structured trading. 60.18. And there's a little bit more. Here was the full session VWAP. You can see it right there. And we have a structured trade called VWAP to VPOC. VPOC, volume point of control, or the ETH overnight volume point of control, is like a retail price. Now we have RTH open. And there's more. But where are we? We're above 60.18. Let's see what happens. But before I do that, I have to bring you this. The Trader Lab is 24 hours, 7 days a week. Now, this is yesterday at 8 a.m. in the morning. I posted, we're having a conversation. Now, this is a short clip, about 15 minutes from 2 years ago. It's about higher time frame analysis. Another one, trading multiple time frames. Very confusing for developing. Trading a trending market. This one's about 4 hours long. What happens when the context changes? Context is the condition of the market. It changes intraday. How do you get in alignment? A short clip using Bookmap to trade the volume profile. And there's a 600 plus video playlist available to all of you. Here's the one that I think is pretty important. Trapped in Trader Groundhog Day. I did this one. It reflects my 45 years of trading development, and I'm still a developing trader. I used indicators, and when I started trading 45 years ago, we didn't have indicators. It was classical bar charting. So I grew up on indicators, and I thought the holy grail had showed up, and all I had to do was tweak and tune multiple time frames, and it started out with more and more indicators until I built trading systems. I kept waking up in the same place. I coined a phrase, Trader Groundhog Day. If you are indicator-based, and this is not anything against indicators, it's more about why traders fail. If you're not a successful trader and you think the answer lies in an indicator, I'm going to suggest you might want to understand how the market works first and develop an edge and a business plan for trading the business of trading, which might be different than you imagine it to be. Just saying. That's what Trader Lab is built on. Now let's take a look at the next piece, I think. This is the current high volume, higher time frame profile. And where did we open? Well, you know, we tested in the ETH 80, if my brain is working right here, ETH low, too low. Why does it happen there? Because that's a retail price. And if we open and test too low and we're above the retail price from Friday, then what? North. If we get above 60.29, which is the low of the RTH open, let me try to show you these levels again. I'm spending time here because this is trading in fractals. 60.29 RTH, and where was the ETH low? 80. 80. All these are on the chart. Too low. What's too low now? Here. Where'd it come from? 29.50. Just showing you the madness, and then you can come to Trader Lab if you find this interesting. There's the 29.50. There's the current low of the day. Huh. Is it a mystery, or can you learn this? What is the market? I always like to say it's not based on your indicators. What is the market? Do you really know? The market is based on the participant interaction and behavior. That's what the profile's all about. Participant behavior, not a lagging random indicator. Market's random. Why add more randomness? We're always in uncertainty. So now let's come to the RTH open. If you have questions, please post them. If you're in YouTube, appreciate you visiting the Trader Lab and post your questions. Remember, I'm streaming from Costa Rica. If I drop out, I will do my best to come back. One moment here. I do not have a stream. Just got to check and see if I'm in the right link. I don't know. Please post something there in the chat. I cannot tell at the moment where I am in YouTube. And please give a like if you're visiting. I hope you get something out of this. I am in Costa Rica, and if I drop out, it's about 5 minutes before the monkeys get off the internet cable, and I'll come back. Are you guys tracking? Please give a like and post a comment there in YouTube. I do not see anything yet. Okay. Hello? Yes. Okay. All right, guys, let's continue. So now, here's what we know. We are rejecting and gapping. It's about a 50-point gap-ish, something like that. Whatever it is, it's a wonderful thing. And everything says going north. Now, in the Trader Lab, and again, this requires you do the work. I've done all the work, and I've shared it. Now, you don't have to do anything. Of course, Trader Lab's made up of everybody with all different kinds of methodologies. And I'm the first person to say there isn't a right way to trade. It's like, what's the right way? I've been coaching and mentoring and, of course, sharing and teaching for many years for many different traders. I was a fund manager. I had traders on a trade desk with me, and it was not romper room. This is not a romper room or a hobby business. This is literally a business. If you want to learn the business of trading, that's why I accepted Bookmap's invitation to do Trader Lab. I know what it takes, and I've been through it, and I wish I could recapture the years that I lost because I believed what the business was certain things when it really wasn't. But nobody was around to tell me or share anything because there were no off-floor traders when I started. It was all fundamentals. Technical analysis was in its infancy. So I actually thought I was doing the right thing. Nobody told me any different, and I didn't see anything different. There was nothing. No internet, no computers, not a Zippo. I just want to give you a frame of reference. And many traders think that this is a research project. The research in this business is to establish a statistical edge. It's not to reinvent the wheel unless you get off and get rewarded financially and emotionally by being a research scientist. I'm going to suggest the business can be built on what already exists. It just probably isn't what you think it is. And a lot of that has to do with software vendors. I'm going to show you something. I showed it the other day. Whoops, that's not what I wanted to show you. I'm going to show you something. And this, I think, answers the question. What is the right way to trade? Here it is. I think the answer is right here, and I'm going to show it to you if I can. This is Investor RT and is a very robust, high-tier trading software package, and it's a higher time frame. These are all the indicators. Now, I'm going to ask you the question. It's very simple. Darvis box, that always interested me. I mean, they come up, Chaikin money flow. That was very popular. CCI, another oscillator. Bull power. Yeah, bull what? Bollinger Bands. You got, bear power, effective volume, elastic volume. Alexander Elder, you've heard of him, right? He wrote a book. Everybody likes that. Fibonacci, extensions, arcs, projections, retracements. You guys love Fibonacci. Me too. And then I combined it with Elliott wave. Wow, that was very exciting. All kinds of moving averages. Thought those are pretty good. Everything works sometimes. Pivots. Anyway, you get the idea. Regression acceleration, forecast, slope, linear slope, relative vigor. That takes an espresso for me. You guys get the point? You want to spend the rest of your lives searching for the Holy Grail? Why do all those indicators exist? And it's not an indictment of indicators. It is, for me, only an indictment of thinking that this is an indicator-based business. I'm going to strongly suggest, and it's only my opinion, I have to always say it might be completely different for you. That's not the case. So, and if you're still trying to find the right indicators and you're trying to do this research and look for the, whatever it is, the needle in the haystack, I'm going to suggest Come to Trader Lab. Let's get on with it. Once you are a successful trader with a consistent process, a business plan, a statistical edge, and you understand this is gaming, not prediction, not being right, not any of that, that you're operating in a 100% uncertain environment 100% of the time. You can throw all the ideas of predicting out the window and adjust your thinking to what this business is. It is gaming. Gaming means only playing games or setups that have a statistical edge. It is not predicting what's going to happen next. The casinos, which is a successful business model, you might agree, have figured it out. They don't predict anything either. They just play the games that have an edge that favors them. And they rely on a random distribution of outcomes when they interact with the gamblers to extract the dollars over time from those gamblers, which because they have an edge. They don't make the games up. They don't try out a new game. They don't even try to fix the games they play. They just play the games that have an edge. Have you ever gone to a casino? What do they control? They don't control the cards coming out of the deck. They don't control how the gamblers play their cards. What do they control? How they play their games. What are you controlling in a trading environment? Is it how you play your game? Do you even know the game? You can learn this. And don't take what I'm saying as anything negative towards what you're doing. It's just that after 45 years and also mentoring and coaching many traders and sitting on a trade desk and coaching and managing them, I know the problems. I know the challenges, and especially the mental aspects of this and why we don't do what's in our own best interest in this environment. There's a lot to learn, but it's not complicated. Indicators, in my opinion, are the enemy, not your friend. The thing about it, indicators are, if you understand market mechanics and how it works, you can then go the other way and understand how to use an indicator. It's not the indicator. It's what your primary inputs are, and then can you deploy indicators. I don't trade with I don't use them. And here's a simple reason why. This is language. If you can learn to speak the language, that is all your indicator is trying to do, or you're trying to do, is get the indicator to translate. I have found if I have a level right here at 60.29, that was a retail price, 29.50 in my composite profile, and I open and it's too low, where might I go? Might I go up? Shopping. If you shop, you're a trader. You're just in a slow time frame, that's all. So, what is this? Let's look. I'm going to now go into structured trades. Hope you're getting something out of this. And remember, if I disappear, it's the monkeys down here in Costa Rica. We've got to blame somebody. And the infrastructure. So right here, RTH open, gap. Now what's over here? ETH, volume point of control. What's that? The retail price in the ETH. It was also a target coming up. What's my next target if I clear the overnight volume point of control? The ETH high. Remember where our long was. I already showed it to you at the top of the stream. It was quite a bit lower, targeting this, and then targeting this, and then wherever. And that's up to you. Now we're in the RTH open. What is this? How about another potential long? Let's see. And all our targets are still open above. And again, you can review this stream, and it's exclusive to Bookmap Discord Trader Lab participants to review, reverse engineer, screenshot, etc. One of the most complex aspects of anything is to understand the condition of the market. It's something called context. It took me, I would say, of all the things about this, context was very difficult because we have to think in a vertical integration or multiple time frame. Now, for me, there is no time except in the RTH. That's because we have a fixed open close by the clock. Anything else after that There is no clock. It is participant behavior. Let's look at the first trade. Again, think real estate. Location, location. What's the market doing? We have a gap above us. Why is the market going up? Well, great question. Who are the buyers? The shorts and new longs. So the shorts become buyers, buy stops. They're getting squeezed. If the shorts are getting squeezed, do I want to fade and join the sellers who are running for the exit? Or do I want to look for a way to get aligned with what I call the advancing army? So I'm going to use counter rotations that are in alignment with the auction. You notice it says level. Why? This is already on my chart. Gaps, targets. Target, by the way, just saying, not important, but it's all on the chart. So this is my first long in the RTH. Where am I going to try to go? Back here. This has a high probability. I'm not going to go over statistics. I do it quite a bit. They're all available in the Bookmap Discord Trader Lab community. And of course, it's not a recommendation you guys do anything. You have to vet everything for yourself. But it helps, I think, to be in a community of like-minded traders who have a consistent goal to leverage each other's experience to become better and to build a business plan. Too low? Test. Well, buyers come in right here. 54 sell stops coming out. What's above this? Opening swing high. We have to watch the opening swing low. We got to watch the opening swing high. The shorts are being steamrolled. Where's my long? VPOC migration. Follow this process. Now I'm in a fractal time frame. What that means is I'm now reading the intraday developing rotations and I'm tracking the volume. Volume profile is about the participant interaction and it happens in all fractals. I'm a little allergic to the word time frame because that's fixed. So you can interchange time frame with fractal. The difference between a fractal and a time frame, there's no clock. The fractals, what does it take for these participants, the sellers here and the buyers here, to determine what is fair and unfair? I'm going to show you something in microstructure. I just want you to see structure. I want to speed right along. This is where the sellers are, passive. You can see them there and there. There's a seller, sellers, limit order book, sellers. Can't see them, they're passive. What's down here? Buyers getting run over, buyers getting run over, buyers over here. Break high. Where's the volume? Here. Suspect. Break high. Where's the sellers? Here. Where's retail? There. Let me just mark it. I go very intentionally and very slow initially so you can see fractals or structure develop. So what I'm doing is reading in real time a language of the market. And I can't predict anything. Don't think I know anything. What I can say to you is I'm clueless and that I know I don't know. And I'm not ignorant. Clueless means it can do this, it can do that, it can do anything. But I know based on why did the buyers come over here? Because these sellers got run over. What does that tell me about down here? It tells me there's passive buyers here. I got more buyers there. And if I overcome these sellers, then I have a microstructure breakout. Where's my micro high volume and my variable high volume node and my alignment in a higher time frame, if you will? It's right there. This is along in the Trader Lab. Where's my resistance? Well, there. But what's my target? This is my resistance, I should say. So I have a target there for a scale, and my next target is here. This is a structured trade in Trader Lab. So let's watch this. So this is your first long, or you're just managing your long from the ETH, which I already showed you. Let's watch where we come. Do you see it? Is everybody tracking? This is Trader Lab. How are we doing in YouTube and how are we doing in Discord? Are you guys with me? This is structured trading, guys. Now, how do you handle this? Let's talk about the long. If you get long there, where's your stop go? Under there. Where's your scale? Right there. Where are you trying to go? ETH high, structured trade. If your stop is under here and you come up here, what was that? Opening swing high, target, you counter rotate. Now, what would you do? Let's talk about this. Isn't this auction now too low? And if I return to what the shoppers, the participants rejected, and I know my buyers were here, absorption, and I see my buyers and I get the rotation and I come here, might this be a long? Might it be an add? Or might it be nothing subject to your plan? Let's look. Are you guys tracking? There's more. This is all structured trading. By the way, what is this? What is this? Overnight volume point of control. Same as that, except ETH. When I come over, where? Here. Watch. And it's now too low. I come back and check it. Advanced Process Trader Lab. It's another long. Let's look at the symmetry. This is a fixed location that was here previously on the price map. We open above it. We test it. Too low. I get a long. I test it again. See it later. Overnight volume point of control. ETH retail. It's the same as this, except this is the most recent auction. It is resistance. If this is too low, I come back here. If I break above it, I can get long here. And how do you get long here? Well, let's look. If this is too low, who knows? And there is absorption. There's my counter rotation. And I can't get under here. What is this set up for me? Let's just look at the language of the market. Watch. What is this? Too low. Variable high volume node. Watch. This is all auction-based trading. Now, the rotations are always random. That's going to get you because you need to be right in your mind. But I have to tell you, you can't be right where there is no right. What is right in trading? How about following a structured, vetted trade plan that has statistical edge? Let's see. What is this? Isn't this the price? If this is too low, this is retail. If I come down here and I reject it, then where's my support? It's there and there. That's it. There. If I'm running a stop around here, I get taken out. I'm just putting the trade back on if that's my plan. Or, let me give you the or. Subject to how you operate, your stop would be under here and you're looking to fill the gap, which is above. Let's come back. Let's look. $29.50. $29.50. Let me make this a little bigger again. I'm spending a little more time on higher time frame because of our robust conversation over the weekend about it. And I really appreciate Trader Lab participants. You know, the idea of education is the squeaky wheels get oiled. This is our gap. So the goal is to go here, not a recommendation. 70-ish. 70-ish is also an outside edge here. I'm not going to go into more of this, but eventually maybe up here and then maybe here, but not my concern. What's my concern? The buy stops here, filling the gap. So this is a long. If you put your stop under here and added and scaled, another part of Trader Lab, you would have all of this, and you'd either be done on the gap fill or you're still trading into this. Doesn't matter. Does it matter to you? Doesn't matter to me. Please give a thumb up in YouTube. This is Trader Lab. If you guys have any questions, please post them. So now I'm going to try to keep this going. Remember, if I drop out, another link will pop up. Too low, break high, absorption right here, break below this, potential counter rotation. It's not a short, it's just a rotation. If you understand market mechanics, you would then be able to use these. And what's too low? This. Let's see. Overnight high, remember, stat. Over 90% probability, past performance, not indicative of future results. You would know this if you're in Trader Lab. You could be taking longs to this. And now there's more. You do know there's a gap, right? So would you be shorting or would you be going for the gap? Well, in Trader Lab this morning, we were talking about the gap. Let's watch. Where do we come? Support, support, support. Break high, support, overnight high, outside edge. We're trading rotation. All of this is just get long. Let's watch. Into the gap. And this is the gap fill. And this is the ultimate target, not a recommendation. 70-ish. So far we've gotten there. Now, I mentioned in Trader Lab, and I'm almost done with these structured trades up to this point, and then I'm going to go into real time and we're going to narrate together. I'm just going to skip past the other trades. There's over 90% probability we take out the first hour's high. This is called the IB high. And we have a trade in here called the IB continuation trade. However, here's the however. We have the gap. So when you're in the gap, you have to determine, are you just going to go for this because you're already in a trade? Or if we break this liquidity at the IB, are you going to take a long for a continuation trade to try to go here? That's part of your personal trade plan. And it doesn't mean you can't or you shouldn't. It means you know where your trades are, they have a statistical edge, and that's what you're going to do. Right here is resistance. If it breaks up and held support, you have a continuation. If we come here, and this sets up at 9:30 Central Time, my time here in Costa Rica. And by the way, I'm at a small beach town, does not have a traffic light. The stop signs are a suggestion. If you've ever been to Costa Rica, you know, they don't drive like the thing of right of way or headlights, taillights, just a suggestion. This is too high. This is a selling trigger. Now, when I say selling, it's not a short. It might be trade management or nothing because you're way out here with your stop and you have 70 as your target. Let's look at the behavior. This is your support out here. This is also support out here. It's called mean reversion. If you don't have a range or an understanding of this behavior, you would not trade this. But in the Trader Lab, there's directional trade and then there's rotational trade. The market rotates and it can still be trending up. How do you trade that? It's actually a trade plan in a trade plan, you know? So that's pretty much what you do. But if you don't have a trade here, you just don't do anything. You might be done with your longs and you might be in your Barca lounger. We have one trader in Trader Lab who hangs out in a Barca lounger. By the way, and this is where my data just dropped out. So this is a target, fill the gap. And this sets up our IB continuation trade. Now, this right here, we break our IB, which is set up here Right here's the IB. It sets at 930. We pull back. We break above it. This sets up the IB continuation trade. However, what makes this questionable is we filled the gap. Now, for me, my trade done here. I don't care. Even though I know I have 70. Now, I also know if I want on the pullback here, I can take a continuation trade up to 70, or I don't trade. I'm just saying, let's look at it. So, we break above the IB, we pull back. Now, right here is the IB. So what you'd be looking for here is a buy trigger. Where is the buy trigger? This is a sell trigger. And if you're doing this, then you're looking for it to come outside, come back, and maybe come out the top. That's one possibility. The other possibility is we rotate down. Now I don't know what's over here, so I can't comment on it. You break high right here, new high. You pull back. This is where your support would be. I don't have the rest of this in here, but this chop, 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 this is now your outside edge. This is advanced. You might not take this trade, and I don't have the volume, but this break or this break, and there's a sweep. The sweep suggests, and liquidity comes in the book, a counter rotation. This is that counter rotation. So for me, right here, let me just show you structure. You're going to see some structure, and it might be a bit out of whack because of that hole in the data, but there's two pieces of structure here. Let me show them to you. Microstructure. So right here, breakdown, and I also have structure over here. Let me just show it to you. Now, all these are volume-based structures. What this says is, this is an auction. Passive here, passive there. This is the retail price in the developing daily time frame. If this becomes too low, and this is too high, and I break above it, then this might be too low, this might be too low. This now is too high, because we reject it there. I break down. This is too low. This is my support. When I break above it, this becomes support. This is support. Now I'm in fractals, and I'm not using an indicator, so I am forced through choice to narrate what it says. In other words, what's this mean? Why does it do this? Because the market's trying to figure out if this is too high, what's too low. That's called a rotation or a fractal. No time. What does it take to decide? Right here, from here to here is an auction. That's why I don't use time frame, because what's the time? I don't know. How long does it take for these participants to vote on value? If this is too high, there's my sellers, and I have my passive buyers here, and that seller is absorbed, and I break above it. What does that tell me about this price? It's too low. Do I wait 5 minutes to figure that out? No, I know right here. Then I know, not what will happen. I never know that. And if you're using indicators, you don't know either. So we're in the same boat about knowing. But what I know that an indicator doesn't know is what happened here. An indicator is averaging some, derivative of price to come up with something. Does your indicator say get short? Mine, since I don't have one, says look for longs because of structure. So this could be a long. This can be a long. See the structure? This can be a long. This is the IB continuation trade. Where am I trying to go? Here. Then it's trade management. Whatever happens, happens. Notice where we come. I don't know. If I break below here, I could be out of the trade. Does it really matter? Are you guys tracking? This is order flow. This is auction market theory. This is the Trader Lab. And no, there's no holy grail. You can spend your life looking for the ultimate solution and certainty. I can assure you, if the casinos could figure out certainty, they would have done it. The business model of being a professional trader is to understand the business you're actually in, which is gaming. If you design a solution built on a successful business model, which is gaming, then I think you might have a better opportunity to actually be in the business you're in than trying to imagine that it might be something different, like getting certain, avoiding risk, prediction. By the way, if you haven't asked yourself why we are drawn to do that, then you need to visit Trader Lab to understand psychology and primal wiring. We are wired to avoid risk. There aren't too many of us to run into the burning building. We are wired to run away from it, right? Or get out of it. So that means we're wired to avoid risk. We don't drive through red lights, hopefully, because we anticipate the potential risk. We are wired to avoid the saber-toothed tiger, and it's built on top of a reptilian brain. So your conscious brain can have a desire to do something, but your reptilian brain is wired to keep you from doing it. So there's a constant conflict, and the conflict resolution logically is certainty, predictability. Well, there is no such thing when you're in a 100% uncertain environment like the casinos are. So, and that's why I did that webinar I showed you at the top of the stream, Trader Groundhog Day. What is Trader Groundhog Day? It is trying to fix something that might be defective. And we don't know that. And the reason for Trader Groundhog Day, at least for me, was that everything works. Everything works. Gamblers win. Casinos play the gamblers. Everything works. If you flip a coin, it works. There's a thing called the coin toss test. Have you ever done it? Just flip a coin and push buy, sell. Use a 5-tick or 2-tick win, profit, 2-tick loss, whatever you want, and just push the button. Or flip a coin and hit it and see what happens. You're going to have winners. Does that make sense? Well, what does that tell you about trying to predict the outcome of anything? How about you can't? If you then understand, like the casinos, that you can't predict anything, and you might want to get off the Trader Groundhog Day merry-go-round where you keep waking up in the same place, then you're going to go, okay, what am I not understanding? You're not understanding the business, and that's why Trader Lab was created. It's not that you become, there's no holy grail, there's no easy. If you want to be in a business that is as terrific as this business, there is a learning curve that's going to be substantial, and you're going to have to undo the things you believe that are built on randomness that don't have a statistical edge. It's actually going to be harder for you. The longer you've been trading with a belief that is unfortunately defective, the more your mind is going to gravitate because you're going to remember those random outcomes when everything works great. That's what I did. And then I put it into trading systems so I can optimize it. That was like, put it on steroids and let's really make it better. Well, I just created a better optimization and a better curve fit. When you go in with the screwdriver with your indicators or whatever you're doing every week or whatever it is, I could have got this if I would have done that. The next time it shows up, I'll get it. And then sometimes you do. But over time, most retail traders are using that process with those beliefs, do not have longevity. So Trader Lab exists to help you understand the business, and then it's up to you, what you do about it. Let's go take a look at our higher time frame again. So we're currently around 60.60. So we filled our gap, and we have our target at 71. Market never has to get to 71. We got to 68 so far. I don't have a problem with that because I can't predict anything. What I know is the shorts that are in this leg coming down, don't forget, we got our target down here, almost within a couple points. We rejected that price. We rejected this price. And on Friday, we took out the stops above Thursday's high and this high and got to this target, 98. What do we do today? We check in the ETH, 59.80. Look at the symmetry. Too low. Where do we come? 60.18. Where do we do in the RTH? 60.18 is the low. Where do we go? Fill the gap. Now, do you think that's random? It is and it isn't. It's random if, when, how. It's not random based on how the market works. And so the thing about trading and Trader Lab is not being able to predict, but to understand why and to understand where you might get an alignment. And then, as they say, act accordingly. Risk management, you will take stops. We all do. Haven't figured that part out. And there's 60-30. Right there. That was our support. And in the ETH, it was 60-18. Let's see if I can get back here. Oh, ETH low. Sorry, wrong one. 60-18 is here. 60-29 is there. And the ETH low at 80. Got the wrong thing. 80, right there, that green line. 80, support. 18, support. Fill the gap. That's the trade. That's Trader Lab. You can learn this. Are you going to learn in 20 minutes? No, you're not. This is an advanced degree in trading. This is really like going to university. It is not romper room. Trader Lab is a serious community of traders who come together. And there's, by the way, is there a right or wrong way to trade? I get asked this, by so many traders over the years. And I'm going to say is if it's not consistent and you're making it up, you're just gambling. And I always suggest go to the buffet, get the cocktails, the ticket to the buffet. Do that because you're just playing. This is about the business. If you want to be in the business, you got to learn the business, right? And a lot of us, because of these software tools, like even the one I have, they're just loaded with tools. And why were all these tools, created? They were created because traders thought if they kept looking, they might find it. Well, suppose that's not the answer, but the problem. I find that's the problem. Was for me anyway. So there's enough challenges in trading. Why would you go down the list and spend your life going through all of these looking for the right one? I'm asking you that because that's what we do. And everything works at times. That's the thing. Everything works. On and on. There's more and more and more. And that's just what's here. Then, if you were like me, you built systems and then built your own indicators. Larry Williams, %R. Very nice. Zigzag, zone oscillators. I mean, gee whiz. All right. I think I can't begin to tell you the years I lost because I was in Trader Groundhog Day. And I kept ending up with the same results. So I thought I just had to make it better, which is logical. But this is not the business we're in. And I'm going to invite you all to the Bookmap Discord Trader Lab community. If you're visiting in YouTube, first of all, give a like. It encourages me to keep doing this. There is no cost for this. And there's a link in the bottom of YouTube. If you're interested in visiting the Bookmap Discord Trader Lab community, there's a library of webinars that are available to all of you at no cost. Let me see if I don't know if I can do this. And 60 PDFs. Thank you, Ned, for posting all of this. He's our curator. Look at all of these. And these are there's over 600 of these. Best videos of different years. I didn't know you did that. And this is the primer. You need to understand why. Day trading, fantasy versus reality. I mean, there's more and more. Are you a trader or a gambler? Well, anyway, you get the idea of it. Why most traders using indicators fail. Are you interested in that? Real-time narration. And there's so much here. And then the actual examples. Let's see if I can open this up without, no, I can't. I'm Not if I do that, there's big trouble. But there's also 60 PDFs. They look like this. That's available to you. Order flow phenomena, actual trades I've taken, and others that are just screenshots. Remember, I'm not a vendor. There's no cost for this. What I am is, I guess you might say, I'm your mentor. And I'm here to stimulate your thinking, challenge you. And if you don't want to be challenged, don't come to Trader Lab. I'm going to challenge you. If you were sitting on a trade desk with me, I'd ask you why. And it's not to say right or wrong. There is no right or wrong in this business. But if you don't have a statistical edge, then you're just making it up. How do we sustain ourselves and maybe create a career path in this business? And past performance always is never indicative of future results. It's because you need to understand how the market works. Think about what you can do if you actually understand the business and can create a statistical edge where you actually might have the ability to put yourself on a path for a sustainable career. What would that mean to you? Now, then what do you do about it? How about you can get better and better and better? Go get into advanced processes. Go beyond what you learn in the Trader Lab. I believe I can teach anyone to trade, but not everyone is going to be able to trade because they won't do the work, or they're going to go down dark holes of minutia because they're really into research and certainty and not getting on with the job, which is only operating when they have a statistical edge. That's why this business isn't for everybody. It certainly isn't. And it can't be. But here's the process right here. Auction market theory. This is in my primer webinar. What is the auction? How do you use a tool like the volume profile? What does it tell you? What about the time frame we operate in? What is that all about? What is time frame? That's Fractal. You guys think of time. I do not use time. It's rigid. The market doesn't operate on the clock. Now, time does refer to RTH and ETH because they're fixed open and closes, and we use them. They're used in the higher time frame fractals. But intraday, there's no time for me. I found that keep trying to put the market in a box. Who created time? We did. But what about the participant interaction in the marketplace? Are they waiting? Lewis, I'm not going up or down until I get 2 minutes. I'm not going to do anything. And you as a trader, I cannot think until there's a fixed amount of time. Do you think that's how the market operates? Just ask him. And then there's this mystery called context. Hardest thing for me over the years was understanding how the market fits inside of itself. You hear, and we all think of, quote, multiple time frames. Well, it's partially correct. There are, quote, multiple time frames. But in the intraday, quote, time frame, developing time frame, it is not time-based. That's the difference. So we need to understand time, and we need to understand intraday time. And then there's the context in those fractals or time frames. And then there's order flow, where the rubber meets the road. This is the process, in my opinion. Up to you, naturally, how you want to use this. Everything is up to you. But you can learn this in the Trader Lab. And this is in the primer webinar. It's all up to you. Whoop, I think we'll get rid of that. And you're all invited to Trader Lab. No cost. And you can access all the additional Bookmap server education. Large cap, small cap stocks, order flow with a high tier tool like Bookmap. What about icebergs? Understanding iceberg behavior, algorithmic behavior, of course, order flow. What happens in a limit order book, market maker behavior, and a lot more. All this is in the Bookmap Discord Trader Lab community, not to mention a community of traders with a lot of experience. Our senior trader has over 50 years. I have 45 years and counting, both professionally and other words. And you're all welcome to the Trader Lab. You can see the activity in Trader Lab. There's a lot of posting, a lot of conversation, all kinds of stuff going on in there. It's a great community. It is for serious trader. I'm very active in here. I post continually through the day, as you can see. This is as close to a virtual trade environment, a virtual trade desk as you might ever find. I do not call trades. I'm very careful because it's about you. I'll point things out, and I'll even point trades out that are developing. I will question you. Why? I will challenge you. When other traders sat on a trade desk with me, it would be, why are you, what tells you this trade is qualified? And they'd have to answer me. If a trader took a trade, and this, you may not like to hear this, if a trader made a trade up and it wasn't a vetted qualified trade, they went home. If it happened 3 times, there was the 3 strikes and you're out rule. They were no longer going to be on a trade desk and at the firm. Now that you may not, if you're a hobbyist, of course, that kind of discipline is not going to apply to you. If you want to be in the business, call it tough love, because that's what it is, really. I want you all to succeed, and I'm not saying you'll succeed if you come to Trader Lab, of course. I am saying you got to approach this with attitude in business. By the way, this is a stop, sweep, and absorption. This suggests potential counter rotation. Now, I'm just looking at this out of left field. I don't know what's going to happen. Let's see. Now, it doesn't tell me it's a long. It tells me I have passive buyers here. That's the icebergs. I have 895 sell stops coming out. I have a sweep. I have my absorption, and I'm looking to see if I can get a rotation off here. Let's see what it does. And I got to look a little further. I got VWAP here. Nothing says I'm not going to come down to the VWAP. And we might be done. I don't know. It's not my job. Don't you? I wish I knew. I have figured out I don't know. So I don't have anything to do. What I do know is, based on this order flow and the location at the retail price, that I can come out now and I'm looking for a rotation up. Now, how do I get on a trade? And this is not, I'm not making a trade recommendation. I know what's happening here. Now I'm looking at locations and I'm looking for the potential, and this is not necessarily a structured trade, it's just behavioral, or a counter rotation. Let's see what it does. And if the trade got rolling, this would be the potential area to observe coming back the other way. Let's see what it does. And again, not a trade recommendation. I'm not even saying this is a trade I would take. I'm saying is it's behavioral. We want to observe. And I got to look a little further here because I haven't been paying attention to any of this. Let's just look. You have questions, please post them. And don't forget, there's a link in the bottom of YouTube if you're interested in visiting the Trader Lab community. Trader Lab is not going to be here forever. It's certainly not going to be no cost. And I'm certainly not going to be doing this. I can assure you of that. I'm a full-time trader. And when I don't trade, or initiate trades, I should say, while I'm streaming, most of the time. Occasionally, I do. But I'm not a good multitasker. So notice the behavior. Absorption, sweep, looking for rotation. You can learn this. Now, this is not a trade recommendation. I really want to stress, right? But let's watch the behavior. Can you learn this? I'm going to say, maybe. Do you want to? Then visit the Trader Lab. No guarantee you'll be successful ever, by the way, because most traders are not prepared to do the work. Most traders are going to jump from idea to idea, to chat to guru or educator. That's fine. But those traders don't typically stay in the business because they don't stick with anything. They're looking for somebody else to hand them the solution. I hope you understand the solution lies within you. It's not me. I can't give you the solution. I can give you kind of the answer key. And then you are going to if you follow the processes in TraderLab, I think you might be able to assemble a statistical edge if you do the work. And if you come to TraderLab, you can ask the other traders at TraderLab, what did you do? What are you doing? Well, how long has it taken you? And no, this is not the 8-week program with the Holy Grail indicator that's going to change your life. Nope, not going to happen. Hope that makes sense. And I hope you'll forgive me if I sound a little terse. I find it rather frustrating as an educator to see so many retail traders fail because they're misinformed and they're chasing an illusion. Those illusions have been around since I started. And I started in 1980. And back then, we didn't have computers and we didn't have internet. But we still had snake oil. Snake oil's been around since they invented snakes. There's always something, the best this, the only thing. And now, of course, with the internet, you're overwhelmed with it. How do you differentiate? Well, what's your experience been so far? Are you still doing something that doesn't work? Are you taking other ideas and vetting them and seeing what actually is valid and what isn't? Are you doing the work? Are you in an environment of like-minded traders, and do you have support? Are you making progress that's measurable, or are you just seeing randomness and thinking that's progress when maybe it isn't? It might just be trader groundhog day. See, this is part of the problem. We all have winning trades. I certainly had loads of winning trades when I was managing money, and I built trading systems because I was trading over multiple asset classes. Now, there was no day trading. It was really swing trading, position trading. If that's the case, and you have winning trades, you think you're doing the right thing. I did. But what I kept finding out was it would continually degrade. So I ended up continually re-optimizing. And a lot of you guys with indicators are doing the same thing, except you're using a screwdriver, maybe not a computer. But you're looking at the past thinking that the future is going to repeat. I did, because when I first learned about trading systems, that was kind of like the thing, you know. So when you start reading about all this stuff and investing in, now AI is the thing. I have to tell you, nothing has changed. The human mind is vastly superior to any current AI. Our competition is not the hedge funds or the trade desk, the banks. Our competition primarily is other retail traders. I have a saying that I coined. Think of it this way. Think like a retail trader. Don't act like one. That's why if we're going to trade into their stops, we're going to trade into this gap, because we know where position traders and all different time frames and fractals keep their stops. It's in the gap. Why wouldn't you target this gap? Why wouldn't you be targeting the gap fill? And then this is the next target. Now, the market never has to go here, right? Would you be done for the day? Could you be done for the day? Well, I think you could. Or do you feel compelled to be active? Oh, I got to do this, I got to do that. Do you have an edge? I find, and this is just personal, it's not a recommendation, the dollars for me are not made in this. They're made in the swings, the larger moves when the other traders get trapped. And I can trade long, short, upside down, doesn't matter. But where are the dollars? Where do I get paid for taking risk? You see? This was the last long, wasn't it? Here? Would you be scaled if this was your obstacle? Yes, this is trading in fractals. So we anticipate the absorption here. We have the sweep. We're looking for a trigger. We come down to VWAP. We have a trigger. We have our resistance. That's all this is. And then either we're going to fall out or not. That's what I'm not calling trades. I'm showing you structure. I don't have a trade here. If the trade went on, it would go here. If it doesn't, we're going to take these guys out and then have this the mid. Market is long. Remember this. Market goes up, go down, market goes down to go up. Market goes up to go down. Market goes down, go up. That's how the market works. How it does it, where it does it, part of the joy of randomness. Casinos play their games exactly the same way, and they accept that they're in an environment of 100% uncertainty. We are in an environment of 100% uncertainty. So how do you navigate it? It certainly isn't by predicting. It's by understanding where your edge lies and what the behavior might be and where you have to get risk neutral and what the setups are, if you will, and what the range requirement is to qualify it. That's what this business is. And then if you have a trade here, you take your trade. You have to scale there. If you don't have a trade here, you're just sitting here and you're a tourist. That's it. There's nothing more to it than that. For me, I'm all good being done for the day. Doesn't mean I will be done for the day. But I have no compulsion to be busy or to take trades that don't have an edge. None of that. Then they're done then. If I missed the move up, let's say I did, what would I be experiencing? FOMO, regret. I could have made blank. Need to get it back. It's like the market owes it to me. It does not. Can you see what I'm saying? That's a psychology. You can learn about this in Trader Lab, and a psychology is, I believe, the biggest obstacle. I believe if you're in Trader Lab, and again, it's just personal belief, it may not apply to you, anybody can learn how to trade if they put the work in and have the discipline to actually do the work. Most don't, by the way, because they're all looking for easy. If it was easy, we wouldn't have a huge failure rate we have for retail traders. Not easy. What the part that's not easy is not the process. The process can be learned. What is not easy is that everybody wants it now. That's just another variation of FOMO. And we all want it now. We're driven to want it now. That's FOMO. I'm missing out. I want to trade. Somebody hand me the solution. Human nature, and another reason retail traders fail. You need to learn about yourself, but you also need to learn why other traders fail. You can learn a lot from them. And you might be able to change your outcome if you don't do what they do. I'm suggesting this only to give you something to think about and to actually have a reality check as we start 2025. What is your reality? Then that's your answer. It's not my reality. But if you've been doing this 45 years, you've learned a couple things along the way. So I've learned a few things, and I'm glad to share it in the Trader Lab with developing traders. And I'm not saying you'll be a successful trader. It's a lot more to it, but it's not complicated. The auction is not a complicated process. I show it every day in the stream. And I want to remind you guys that you can visit this stream every day, subscribe to the channel so you get notifications. And these streams are available to everyone at no cost in the Bookmap Discord Trader Lab community to reverse engineer, screenshot, and fill out a trade plan. And then your job as a trader is just to wait for the trade. It's not more complicated than that, because we're not making it up. In Trader Lab, you know where your trades will show up. You might have a trade here and you might have a trade over here. And if you come back, you might get a counter rotation here, or you're going there. And then you're coming up here, or none of the above. Is that complicated? We can also come out here. We can do anything. It doesn't really matter. Here's what matters. Knowing where your trade is, knowing where it will show up. Watch the behavior right here. We're just going to watch it. This is an outside edge right here. We had absorption here. We have an iceberg hanging out here. We came in the liquidity here. We are now above this. We want to see if we get back here. Not a trade recommendation. This is behavioral. Let's watch it. I've got about 15 minutes left. And remember, if the stream goes down, it takes about 5 minutes for this to reconnect. I'm streaming out of Costa Rica. It's in the mid 80s here. It gets hot every day. So we're going to watch the behavior. What we know about the mid is there's stops under here. We have microstructure here. This is our area to observe, and we'll see what happens. This is the area we want it to hold. It hasn't held it, so it's going to break down by the looks of it. Let's see. Iceberg is here. So this right here is your over-under. This. Right there. So we want to watch. If we can't get back above this, then we are going south of the border. Let's watch it. This is material right there. This is now resistance. Let's watch. Resistance now. So what I know is this is important to come here. If I can't get above here, then there's a possibility to reject this and clean out the longs. So let's just see it. How we doing here in YouTube? You guys doing okay? Please give a thumb up, give a like. As they say, smash the like button, but you don't have to break it. This is the Trader Lab. This is auction market theory using a volume profile as a chassis in the intraday developing time frame. Trader Lab is a group of like-minded traders who've come together to leverage their collective experience. This is about the business of trading. If you're interested in the business of trading and not fantasy, come to Trader Lab and roll your sleeves up. This is an advanced degree, if you will, in trading. It's serious. So it's not romper room. This is like being on a virtual trade desk with me. And if you were sitting on a trade desk, you would either learn to trade or you would be out of the business. This is about business, guys. I'm not saying that to be harsh. I'm just saying that if you want to be in the business of trading, you got to approach it like a business. It requires discipline, accountability to yourself, certainly not to me. And if you don't have the discipline and you're overwhelmed by your emotional states, which, by the way, is a challenge that you'll have to face, you will not be in the business. You'll just be a hobbyist passing through. And I mean that. So this might not be what you want to hear. You probably won't hear it from anybody else, but when you come to Trader Lab, you're going to get the straight oil from the can. Let's come back. Where's our support? Here, which was our low, I believe, yes, and then under here. So we have done what? Let's come back to our higher time frame. We have accomplished our primary objective, which was to fill the gap, which was there. Okay? Our next target up was this, 71, whatever, right up here. We didn't get there. We got close. I don't have a problem with that. There is no precision in trading. That's the other thing. Those of you who are look for precision, there is none. This was our target on Thursday when we had the big sell-off. That was it. And we didn't get there. We missed it. 71.25, and the low was 74.75. So a couple of points. Where are we here? This is our target. Whoop. There. We've missed it by a few points. Does it matter? Doesn't matter to me. If you're in Trader Lab, you would have been long either from, I forget where it is. This was the ETH low. So I think this here was our low, ETH low. I can't remember. ETH low, which I showed you. This was our long this morning. And this was our goal, was to fill the gap. That's all I had for longs today. Shorts, I don't have a short. I don't care about a short. I could be done. What is that, 40 points? 33, 30, 40-point trade. And that's assuming you only took one. How many of those do you need? Are you guys tracking? This is Trader Lab. You want to learn this? Come to Trader Lab. No cost. But be prepared. Be prepared to do work. Be prepared to create a plan for yourself. And be prepared to learn not only yourself, but to leverage with the experience of other traders who've walked in your shoes. We've all walked in the same shoes. And that's the beauty of Trader Lab. We're all the same. We may have used, quote, different indicators, but the result is always the same. Trader Groundhog Day. We all have winning trades, so we keep doing the same thing because we think it's just make it better. At least I did. Trader Groundhog Day. And we all run around waking up in the same place, even though we all have winning trades. Trader Groundhog Day. So, what can you learn from that experience? One of the things I ended up thinking about over the years was I felt like I was constantly repeating the class. It's like you pay tuition, you take a class, and then you pay again, and you take the same class over. And then you pay again, and you're paying with time, and depending on what you do financially, dollars. And you keep repeating the class. At some point, you have to ask yourself, why do I keep waking up with Trader Groundhog Day? Why? And that's the question I'm going to pose to you. Why do you keep waking up in the same place? Because you're like everybody else that has walked in your shoes. We're all the same that way. The difference is, what are you going to do about it? Can you accept that maybe what you believe is dysfunctional in this business? Those beliefs work fine in the outside world. By the way, we base what we do here in this environment with what we know. And we don't know gaming. We know everything else in the outside world, but we don't know what it's like to operate in a 100% random environment, not a predictable environment. The thing about randomness is there are probabilities in a random environment that show up. That's why gaming works for casinos. They're playing the probabilities. They're not making it up, and they're not going back after the day and changing blackjack or whatever it is they're playing to get a better outcome tomorrow. They have done the work to know that they only play games that are structured, that have a statistical edge. They then accept they're in a random environment they have no control over, like us. So if we're in that environment, why don't we just follow a business model that's proven and then adapt it to this business? Do you think that might give you a better opportunity to build consistency? I mean, it's worked really well for the casinos. Do you think might work for you? If that makes you curious, then come to Trader Lab. Use the link in the bottom of YouTube. There's no cost. All you got to do is confirm your email address in your Discord, and then come to Trader Lab, say hi. I'm available to help you. You can always DM me. I don't have a lot of time for that, but I'm always glad to meet developing traders, share some ideas, talk about my experience. I think you're going to find mine is the same as yours. I've just done it longer. So I've had more time to waste more time. So, and I wish I could get the years back, but I can't. Maybe you can get some time back. That's up to you, of course. But you have my invitation, and all the other traders in the Trader Lab invite you also, because by working together, we can get better. This is called leverage. We have leverage in our business here, but we also can have leverage in a community. And it's not about the right way to trade. I'm going to say that answer lies in statistics. But it's also about what does not work. And if you can eliminate what doesn't work and replace it with statistical edge and a better understanding of the actual business you're in, might that change or at least improve your outcome? And there's never a guarantee this is going to work for you, because there is no guarantee. You have to become realistic and be willing to do the work. That's all I can say to you about today, because that's what we got. And if you're interested, you can access the Trader Lab, access that library of webinars that I showed at the top of the stream. You can access the 60 PDFs of structured trades that you can download and reverse engineer. This is not a course. This is not a trade calling room. But there's a lot going on in the Trader Lab. The point of the Trader Lab is to help you think. Have you asked the questions? And there are a lot of traders come to Trader Lab and are, quote, embarrassed because they don't want to look like, well, you know how we are, our ego. I don't want to look like I don't know what's going on. Guess what? You're a trader. You leave ego at the door. There is no such thing as ego. You can't afford an ego in the trading business at all. You come to any community, whether it's Trader Lab or any other one, you got to be the squeaky wheel. Because when you ask questions, and you'll get answers. And then when you get answers, it's becoming integrated into your subconscious. You're developing unconscious competence. The more you interact, the more you ask, the more you develop, the more you can improve, and the faster you learn to read the language of the market. I don't use indicators. What am I doing? I'm speaking a foreign language. That's why I don't need indicators, because an indicator is Google Translate, and that's fine. But if you could actually read this as it develops in real time, what does that do for you versus other traders who are waiting on conflicting, lagging indicators? I mean, might that give you an edge, I guess? And then if you only interact where you have a statistical edge, what does that do for you? If the casinos only play games with an edge, and they seem to do really good with that approach, do you think we can take a proven business model and overlay process on it and only interact with the other traders when we have a statistical edge? What do you think? That's Trader Lab. And you're all invited to visit the Trader Lab. No cost, while it's available. So there's nothing going on here, right? Now, it doesn't mean you can't get short term. You can. You can become anything you want to be. I don't trade in this unless I want to. And I'll tell you that if my risk for a 20-point or 30-point trade is about the same as it is to trade 45 to 50. Well, you know, do I want to risk 3 points per contract for what? To get here? No, I don't. I used to. I used to think trading was trying to catch all these rotations. In my opinion, it is not, because it's all about metrics and risk-reward ratios, right? Why would you risk 3 to make 3? How about risking 3 to make 20, 30? I don't know. Less trades, better trades, higher probabilities come with an understanding of market mechanics. Use the link in the bottom of YouTube if you're interested in visiting Trader Lab. Please hit the like button. It encourages me to continue this stream. Visit the Trader Lab. Download the 60 PDFs. There's no cost, and you have access to do the complete educational portal. Stocks, options, crypto, order flow with a high-tier tool like Bookmap. market maker behavior, algorithmic behavior, and of course the Trader Lab community. Thanks everybody for visiting the Trader Lab. Look forward to seeing you here tomorrow and every day. And remember, this stream's available exclusively to Bookmap Discord Trader Lab participants for screenshots, to reverse engineer, etc. Thanks everybody. Thanks for visiting the Trader Lab. Appreciate all of you taking your time to spend some of it with me and the Trader Lab community today. See you soon.